I think in terms of our base scenario first, we think it's for moderating growth and moderating inflation over the next quarters, with US exceptionalism fading with this recoupling story. Having said that, the election of Trump at the US presidency is basically opening a wider range of outcomes, given that the administration policies on trade, labor, and fiscal side, especially tariffs, are going to widen the left and right tail risk. So one way to navigate the tariff risk, as you said, is basically within the equity complex to cherry pick and basically gear to secular trends and basically diversify your portfolio. And we identify a couple of themes, mostly the AI, rhetoric that we've seen. We think it's going to last. We believe in the Jevons paradox, and also on Chinese equities. So we're long Chinese equities, we're long China tech. And if you think about it, China is the only country in the world able to do fiscal without unleashing the inflation genie.
That's fascinating. There's so much in there. Let me just break down one or two things. Going long secular trends, or looking at the secular trends to avoid the risk of being affected by the tariffs as well. And then you said long Chinese equities and long tech as well. So let me just tie together the first part and the second part. China tech then will be immune, you think, or actually not be a victim of tariff wars?
We think that they're going to be much more protected, given that it's part of the Chinese policymakers' plan to develop their own technology to be independent from the world because of the geopolitical risk. So it's part of their priority industries they want to keep developing. And we've seen the market price reaction after the DeepSeek news. I mean, out of Chinese tech were up massively. So we think this area will be protected in the next quarters.
Yeah.
How careful do you need to be, though, about just buying an index? Because, an example today, XPeng, Geely, both been disrupted by BYD using its smart tech in cars. So some of these companies are very quick to adopt the DeepSeek technology and fold it into some of their business models. So that could be disruptive for rivals. How do we play that theme and make sure you're just picking out a handful of very good stocks?
I think that's where I think active management can basically make the difference. But we think that holding broad diversifying indices could also make sense. But I think not only gearing to China tech, but also other equity indices that could benefit from this willingness of China to become more independent, especially the more Asian indices, or the semiconductors index could also make sense.